What is going on, guys, and welcome back to another very exciting video. In this video, we are going to be taking a look at PayPal. And PayPal is a stock that just hit a brand new 52-week low here today. And what I want to go over in this video is I want to take a look at the 2024 recession that people are talking about. All over social media right now and all over the news, people are talking about how the economy is on the brink of collapse. So what I want to do in this video is I want to take a look at personal income, unemployment, gas prices, personal savings rates, and the consumer confidence index, and how all of those will not only affect companies like PayPal, but also the broader economy. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. As I mentioned here today, PayPal hit a new 52-week low of $57.29. Currently, the stock price is sitting around $57.87. We can see that the stock moved down 1.26% here today. Over the last 5 days, however, this stock is down 8.5%. And if we look at the last month, it's down around 6.5%. Over the last 6 months, down 20%. And year to date, PayPal is down 22.5%. If we look at the last 5 years, PayPal has really struggled, and it is down 34% from where it was sitting at 5 years ago. And from its all-time highs of around $310, this stock is down over 81%. There are a couple of reasons why PayPal is down so significantly over the last couple of years. The first being competition. We're seeing companies like Apple, Google, and Amazon all come into the payment processing space and taking away market share from PayPal. The second concern with PayPal has to do with the broader economy. We're seeing a lot of analysts projecting that consumers are starting to pull back on their spending, and this will have a direct impact on PayPal's business model, as one of their key metrics is total payment volume. In Q2 of 2023, PayPal announced $377 billion in total payment volume. This is up 11% year over year. However, over the last couple of years, they have had growth anywhere from 5% all the way up to 13%. We can take a look at some data collected by the US Bureau of Economic Analysis, and they showed that personal income increased $45 billion in the month of July. That's around 0.2% up month over month. However, disposable income did not increase month over month in July. And what that shows is that expenses for consumers are going up just as fast as personal income is increasing. However, even with that, consumer spending increased to $144.6 billion. That is up 0.8% month over month. Even though we are seeing consumer spending increase, the problem comes with disposable income. Disposable income is often spent on want-to-haves, and these are things that really drive the economy forward and especially affect a business like PayPal. Another concerning metric is the unemployment rate. It jumped up to 3.8% in August from 3.5% in July. However, one thing to keep in mind is there is a certain amount of cyclicality to this metric. We can see back in April, it was sitting at 3.4% and then jumped up to 3.7% in May. And that has happened a few times over the last couple of years. So hopefully over the holiday months, we'll see some seasonal employment go through, and that will help drop this unemployment rate, hopefully back down into the 3.5% range. And unemployment is a very important metric to keep track of in terms of recessions, because the more people that have jobs, the more money that they are able to spend in the economy. And when we see unemployment spike up, that means there's less spending in the overall economy. And that was present in 2020 and also 2008, 2009, 2010 range, when we saw unemployment get all the way up to 10% and above. One of the things that hasn't helped the overall economy is gas prices. We have seen gas prices go as high as $5 over the last couple of years, and that is the highest we have seen them ever since the 2008 recession, where gas prices reached $4.10. And with prices this high, it creates strain on the consumer because they have less money to spend in other places because they are spending it at the pump. Another concern is the personal savings rate for consumers. It is currently sitting at 3.5%, which is the lowest we have seen it in the last 5 to 10 years. During the pandemic, personal savings went all the way above 30%. This had a lot to do with the amount of money being sent out into the economy. However, over the last couple of years, that has dropped in a significant way, and people have had less and less money to save. One positive note is consumer confidence, and this has a lot to do with inflation. We have seen inflation spike up over the last year or so. However, it is really leveling off in the last 6 months, and that is causing consumers to be a lot more confident in the prices that they are going to see at the grocery store and for a lot of their basic goods and needs. A lot of this data we won't see affect companies until the next earnings cycle, and PayPal PayPal specifically is not expected to announce their next earnings until November 2nd. However, looking at the business right now, it still appears to be trading at a very deep discount. The current forward P ratio is 10.38, and when we compare that to where the stock was trading just a year ago, it was trading around a 17 to 18 forward P ratio. And in my opinion, this valuation is a little bit silly, especially when you compare it to the metrics behind the business, because currently PayPal is bringing in around $28.55 billion in revenue for the trailing 12 months. And if we compare that to 5 years ago, they were bringing in around $13.8 billion. So in the same time period that we have seen the revenue over double, we have seen the stock price fall by over 34%. And EPS has also bounced back in a significant way. We could see a year ago, they had a quarter of negative 29 cents. However, it has jumped all the way up to positive 92 cents. And this is a similar level that they saw throughout 2020 and 2021 when the economy was booming. And this is even higher than the levels that they were seeing in 2018 and 2019 when they were anywhere from 36 cents all the way up to 69 cents. And as PayPal's stock price has fallen, even PayPal has taken advantage of the buying opportunity. We could see that year over year, their shares outstanding have decreased by 3.8%. So personally, when I look at a company like PayPal that has over doubled its revenue in the last 5 years, its EPS has grown and they have been able to maintain both of those metrics, and the stock price is down 34% over that same time period, I see it as a buy. And that is exactly what I am doing with PayPal. I have built out a solid position in PayPal so far, and as it continues to drop, I will continue to add it to my portfolio. However, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.